there is a party, or maybe there's not. And that is where the conundrum, no, that's too big of a word. Okay, here we go. There is a party, or maybe there isn't. And that is where the problem lies when it comes to approaching a trade. So I'm going to tell you how I approach this whole party situation. Now, what is this party that I'm talking about? Well, the party is essentially a trade, an opportunity. And whether you're early to the opportunity or a little bit late to it, that's where the whole kind of gotta weigh pros and cons. And that's what I'm going to explain here and why I choose to be quote unquote late to the party. And I think it makes a whole lot of sense, and it really essentially is kind of a line that establishes, are you really trading, or are you just flat out gambling, hoping, and just hoping? And I'll explain what I mean by that. So what I want to do to fill this out is let's first just get the points of the chart up here. So this is flexibility, and then over here we have potential. So flexibility, potential. Flexibility in terms of, well, I guess the word, how much can you maneuver? Is there any wiggle room? Can you kind of get a little bit more creative? Potential in the sense of potential of gains, potential of losses, just potential for the trade. Over here, we're going to have early to the party. And then over here, we're going to have late to the party. And again, just to reiterate, the party, or early, is essentially predicting. So you see the word predict. It's a very popular word. If somebody says they can predict something, well then, oh, that sounds great. And here, late is reacting, which in the world of trading, many people kind of associate with reacting. Come on, reacting? I want to be able to predict. Well, this is where I make my argument, and this is why I trade the way I do, and why many people in the clay trader community trade this way, because I think it makes a whole lot of sense. So let's just kind of go through this and apply the thinking. So let's say you want to predict. Let's say you want to just, what? I think that stock is going to go up. In a very simple example, they have earnings, and you're thinking, what? I think those earnings are going to be great. I think the market is going to love it. So I think that stock is going to skyrocket. So yeah, you are trying to get early to the party, but your flexibility is zero. You are in, and then it just becomes let's hold and hope. I'm early to the party. Now, as far as potential, there is a lot of potential. There's no doubt about that. But the side note here, kind of the little asterisk, is, well, part of that could be a loss. You could absolutely kill it. You could be right, it could explode, or things could go terribly wrong, and you could have a lot of losses. So yeah, the potential is great, but potential slices two ways, right? You can win or you can lose. What about down here? Reacting. Well, when it comes to flexibility, you have a lot. Because at least there is a party happening. Sometimes, I see it all the time in penny stocks, but it can apply across the market. People think that something's about to explode. So they put a bunch of money into this penny stock, and then they literally need to, I hope it goes up, I hope it goes up, I hope it goes up, because there's no other volume right now, so it needs to go up. And then nothing ever happens. There was no party. So my philosophy is I want to first at least know there is a party, at least know there is volume, there is movement, there is things going on. And second, I'd like to have a little bit of an idea of what is going on with the party. Now that's where the downside comes in. Because I want to see kind of what's going on, the potential is less. Meaning, I might not make them as much. If somebody is early to the party and they are right, they're going to make a whole lot more than what I would make if I'm late to the party, and then I have to sit back and see what happens, and oh wow, yeah, it really exploded. So, but let's look at the risk side of things. If I'm wrong, well, really, I can't be wrong because I'm late to the party. So I get to gander and say, oh, wow, that thing turned out really bad. But if somebody that was early to the party showed up, they can get absolutely steamrolled. So the point here that I'm getting across, or trying to get across, is I'd rather sacrifice a little bit of potential gains in order to know that there is a party, or know kind of the philosophy of the party, the mood of the party. Is it a bearish party? Is it a bullish party? Like I said, to me, that's worth sacrificing some of the gains. And up to you, well, I mean, that's kind of what you have to weigh. Is sacrificing little gains to at least have a lot more flexibility worth it? To me, I want flexibility even if that costs me a little bit on the upside or the downside, depending on if you're shorting. So that's the key question. And for me, hey, I'll react. I'll show up a little late to the party because sometimes for those, like I said, going to that penny stock example, hello, and there isn't even a party. Sometimes you know the party's coming, again, as an earnings example, but you could think it's a bullish, a bull is going to greet you at the door, and then a bear just jumps out and mauls you and gets you by the jugular, and it's game over. So I'd rather show a little flexibility, show up a little late to the party, maybe look in the windows, and then make decisions based off of that rather than holding and hoping because you've given yourself zero flexibility by showing up early to the party. So reacting, yeah, it kind of gets a bad connotation out there, but I think when you really just stop and break down the risk versus reward and what you're sacrificing, to me, I'm going to be late to the party all day long.